afternoon, everyone, and happy Friday. Welcome to Stock Market Today. Alyssa Corman, Ed Carson here with a wrap up of the day and the week in the market. The index is getting hit on Friday. Amazon weighing on the major indexes here. We have the NASDAQ down at 0.7% for the day. The Dow down about 0.4%. The S&P down 0.5%. The Russell 2000 down 0.7%. And Ed, give us a preview of the names that we're going to be talking about this week. We had interesting earnings moves this week and more earnings reports coming next week.
Yeah, so we're going to talk about one of the big ones, Amazon, that was a loser this week. We're going to look at Roku, which is on tap next week, and Steel Dynamics, which has earnings out of the way.
Okay, yeah, a nice breakout there. But first, here's a look at the NASDAQ on Thinkorswim from TD Ameritrade. We have our candlestick charts here. So for the week, Ed, finishing Friday back down near the 21-day moving average.
You know, that's the market rally was sort of deceptively bullish, I'd say, this week, as the major indexes pulled back, especially the NASDAQ, with a couple of things, Amazon and Facebook dragging on things. But really, yeah, it's just down to the 21-day line. And a lot of the market internals have improved. We saw more leading stocks move. So this wasn't, if anything, we were worried about it a few days ago that the NASDAQ might be getting extended, especially the NASDAQ 100. So if you have the major indexes sort of go sideways or pull back a little bit and a little bit more breadth, more buying opportunities, I think most active investors would be pretty happy with that scenario.
Yes, well said. And now let's go ahead and take a look at the weekly chart. And then I have to zoom in, of course, so we can get a bit of a better view here, Ed. So down for the week, following up after a big blue week last week. But like you said, if we can just kind of hold near here, have more breakouts while the indexes keep from getting too extended, that wouldn't be a bad thing.
Yeah, and it wasn't that big of a move. I mean, we had, like last week, a real positive finish last week. This one, yeah, we may have finished on the downside a little bit, but it wasn't a tremendous move. And you can definitely see that with the weekly action.
Okay, and now let's flip on over to the S&P 500 on MarketSmith. So changing my screen here. Here's a look at the S&P. So the S&P has been in a holding pattern, more or less, around this 4,400 level.
Yeah, I mean, partly because there's some other sectors that did better. A lot of the sectors did well, mining, some of those financials, some of them did well. Yeah, the S&P didn't even touch this 10-day line. So it's hard to say. I mean, it was barely down for the week. It looks just fine. This one, you can't really notice that much of anything happened this week on the S&P.
And a similar weekly finish for the Dow as well, down about 0.4% for the week, still holding above its 10-week line after a big move up last week and not even coming down to its 10-day either.
Yeah, and really all this action, not only was it let maybe other leading stocks catch up or other thing or break out and build a relative strength, but a lot of handles can form in this kind of scenario.
Very good point there. And small caps, got to touch on that as well. Hitting a bit of resistance at the 50-day line for the week, though, up about 0.7% after coming down to the 40-week line last week. So continuing to move higher. Any indication of breadth that we can use the Russell 2000 as a proxy for?
I use it as a proxy if I don't really want to dig in and look for the advanced decline or those kind of things. I just want to see something quick and dirty. I mean, this gives you an idea. There was a little bit of improvement in market breadth this week. You don't want to make too much of it, but the Russell improved a little bit, but it's still below its 50-day line. I mean, it's a little bit better, but it's not great.
Okay. And again, it was a big week for earnings. So if you are talking about how to handle your portfolio in this environment, we had some buying opportunities, chances to hold on to big winners heading into their reports, but you may have had to have shifted gears if a stock moved against you on results. It wasn't all butterflies and rainbows for earnings this week.
That's right. I mean, there are definitely some big winners, but you want to take advantage of those, but there's the situation is that if you don't have much of a cushion or a down on a stock heading into earnings, chances are you want to take some action.
So Amazon, a great example of that.
Yeah, and Amazon, it had broken out, it looked pretty good, and then ran up, and then it came down a little bit ahead of earnings, but it was still in a buy zone. Well, the thing is, it wasn't much in a buy zone, and you can see how, a lot of people are going to be down at least 5%, maybe more, maybe 7, 8%, which is an automatic sell rule, but gapping down like that on the week sales and sales outlook below the 50-day line, huge volume, that's a pretty strong sell signal. It just, you may feel like, oh, everything's working fine with it, but there wasn't much of a cushion really.
And other internet related stocks moved in sympathy with Amazon today.
Yeah, if you look at the S&P 500 biggest losers, I mean, there was right around the biggest losers were Amazon, eBay, and Etsy. And really early in earnings season, when the big names, and they often are the first ones, when they come out, you really want to pay attention to it, even if you don't own it, not just because of the market move, but if you own Etsy, boy, it's pretty obvious what happened there. Next week, it's not going to matter as much because we already have had Amazon. We've already had that. So when Etsy comes out, it's not going to drive e-commerce stocks like crazy, but definitely have to pay attention with these early earnings, especially.
Yeah, and I think the question now is, can the market, or at least this area of the market, shake off this bad news quickly? Will it be able to do that? But more earnings reports to come, so attention may focus elsewhere, like looking ahead to Roku, which reports next week. A string of losses in the back half of the week for Roku, down 7.4% on Friday. And for the week, we saw Roku losing 9.6% in heavy volume. And this comes on the heels of a big week last week for the streaming stock, where it gained 18%. So giving up some ground this week, and we have earnings due on the 4th. So less than a week away at this point. So only a couple trading days. So I guess that would be on Wednesday. We get results from Roku.
Yeah, I mean, if you bought at the traditional breakout, boy, you're already down quite a bit, probably somewhere like 6 or 7%, that, or actually probably closer to 8%. So that'd be an automatic sell unless you bought it right at the breakout, and, probably there anyway. Even if you bought it at that trend line, as a breakout, you're probably down, wiped out a double-digit gain heading into earnings. That's not very good anyway. Even if you didn't have earnings, this would not be great action.
Right.
But heading into earnings, look, this stock may fly on earnings, but it could dive. And you can just see how much it's moved day to day. This is a volatile name. It moves a lot. So the question is like, yeah, you have a couple of days to see what happens perhaps, but stocks like Amazon and PayPal and others, you can show good stocks can have really negative reactions to earnings reports. So it's just a portfolio management. I think there's a decision, you don't want to see your portfolio blow up just because, and there's nothing you can do about it.
Right.
But as opposed to, but there are other ways of dealing with options, and like without just to completely just dropping and forgetting it altogether.
Yeah, that's exactly right. We always talk about how risk management is so important. And, if Roku does have a strong positive reaction to the results, you can always buy it back. Of course, it's not as fun, to pay up for the stock, but you're managing that risk and getting rid of the potential for you to be down pretty severely in the position if you didn't head into it with a cushion, which is why we've been talking a lot about early entries and more aggressive entries. You definitely want to have more conviction in a stock. You don't want to just be buying anything when it's still low in a base, but Roku really has shown a lot of power in recent weeks. So I think it'll be very interesting to see what they have to say in their next earnings report. And Steel Dynamics, as you mentioned, Ed, earnings already out of the way, reversing slightly lower on the day today, down about 0.3% after a breakout from a double bottom base on Thursday that was accompanied by some pretty nice volume, as we're seeing steel stocks, which had taken a break for about 6 weeks or so, taking a step in the right direction. Of course, though, not all steel stocks have been taking as long of a break. Ternium, which we talked about on IBD Live this morning, that one's been running away, but Steel Dynamics offering a buying opportunity this week.
Yeah, it's like it's nice to see that momentum. And you can see the steel producers group is ranked number 5. Some of it's based off the performance previously, but obviously this week, in the past couple of weeks, looking pretty strong again. It really rallied off of earnings. Then there were strong earnings by peers on Thursday. So and in the recent days, so nice action. It's still in a buy zone. Heck, it's almost not only a buy zone, almost an early entry. You can almost treat it like that because it's got that 50-day line and the breaking of a trend line. So, it's in that area. It's definitely the opportunities. The risks are so much less with earnings off the table. You're not going to have to wake up probably and see this drop 15%. I mean, it's just it's just such a relief to have that kind of situation. You could always say, well, why not buy before earnings? And yeah, you could capture that extra gain, but it's just sort of like buying a car. It's like, well, what if there's a 50% chance it breaks down tomorrow? Wouldn't you be willing to pay a little bit more for, if you buy it, that the car won't break down? I think most people would say yes.
Yes. And while it is arguably a lot more fun to own stocks like Roku or Amazon and not a steel maker, this is looking like a great growth stock, not just from a technical perspective, but the numbers that it's turning in as well. So while more tech stocks have been looking, and software, they've been looking more appealing in recent months, maybe it's still time to get a little exposure elsewhere. You don't want to put all of your eggs in the tech basket.
Well, that's a great segue talking about things, because that's a great, there was a lot of buying opportunities, but also an opportunity, to spread out beyond tech. Because for a while there, all the winners were sort of in that tech space. And so naturally, even if you didn't mean to, you're going to be buying these stocks and maybe cutting these other stocks that were not in favor. So if you have an opportunity to broaden that out a little bit with some leading sectors, that's really something I think this week and maybe going forward to take advantage of.
And so, what's the market outlook right now? What's kind of the temperature of the market? Should investors be fully invested right now? Should they be looking for more buying opportunities with more earnings coming out next week? How should they be positioning themselves for the week ahead?
Yeah, I'd say it's still a fairly bullish outlook, and better in some ways than last week, because there's more buying opportunities. The market internals and the indexes, they all look a little better in some ways, not being extended, and the internals looking a little stronger. Yeah, I think there's definitely, I don't know about being fully invested, but I think invested and looking maybe to add. There's actually this next week just a slew of earnings. They may not be as high profile. We don't have Apple, we don't have Microsoft, but there's so many of these stocks with really high composite ratings that are out there. So a lot of opportunities. You should be paying attention to them with your watch list. You should be getting that ready list of stocks that are close to buy points, especially those with earnings, so you can take advantage and try to jump on them as quickly as possible to get as good of a price as possible. Not necessarily buying at the open, but buying a few minutes or the first hour, but still trying to get in early so you don't buy extended.
And we are going to be covering it all every day on IBD Live in real time, but also throughout the day on investors.com. So make sure you are following our coverage there. And as I mentioned, on IBD Live as well. So investors.com/IBD Live. Make sure you check that out. Ed, thanks so much for your analysis. And thank you all for tuning in. We'll see you right back here on Monday, everyone.